Is the US economy about to take a nosedive and drag the rest of the world down with it? Well, it doesn't really look that great right now. The American economy is the most dynamic and robust economy on the planet, and one of the reasons why is because they were the most freely trading country with some of the lowest base tariff rates. That's not the case anymore. No one has a crystal ball, but every economist has been predicting this. The most important reason is that the US economy already dropped in the beginning of this year. GDP is also known as gross domestic product, and it measures the overall economic output of a country. If it's at zero, that means the economy didn't grow at all. If it's above zero, that means the economy grew, which is nice. But if it's below zero, that means that the economy shrank. And if we have two quarters or 2 3-month periods where the economy shrinks, we're officially in a recession. To make matters worse, reports are coming in that the economy actually did even worse in the beginning of this year than we thought. Another big problem, which we can directly pin on the tariffs, is that inflation is going up, especially core inflation, which has increased from 2.7% to 2.9%. That's a problem, and here's why. Inflation was at its highest over the last 4 years in 2023 when it hit 6.5%, and then we see this nice drop. That makes us very, very happy. But you can see in the beginning of 2025, it started to not only stop dropping, it just stayed flat, and now it is increased, and people are concerned that it's going to keep increasing because of the higher prices due to the tariffs. And this was predicted by every single economist. Obviously, prices are going to go up across the board if everything we're importing becomes more expensive. Now, according to the Yale Budget Lab, this is going to lead to an increase in unemployment by at least half a percentage point by the end of this year. This is going to lead to a decrease in average household income by $2,800 just for this year alone. It looks like manufacturing output might actually grow by over 2.5%. Unfortunately, construction is going to drop by at least 4%. And this is pretty crazy because even though we are experiencing a money supply increase and overall inflation, people are losing money. And that money that they are losing, the US dollar, is becoming weaker. As you could see, the DXY dropped from over 110 to now under 100. It's at 98.6, which isn't normally a bad thing, but it is a very bad thing when the dollar gets weak and the value of the debt that we're selling, like US treasuries, starts dropping. And that's exactly what's happening. When the value of US debt goes up, the interest yields that the government pays to keep you holding onto that debt drops because they have no incentive to keep paying you high rates. But when the value of our debt or treasury bonds starts to drop, the government has no choice but to offer a much higher interest rate that they have to pay to keep you buying and holding on to our debt. And look, these yields have shot up, of course, from 2022, but even over the past year, it is over 4.4% again. The US dollar is supposed to become stronger when our debt becomes cheaper. It's supposed to be a little inverted. When the dollar becomes cheaper and our debt becomes cheaper, that is a very bad problem for the overall economy. I'm not even going to say anything about the stock market because that just represents how investors feel. That doesn't affect what the world market actually is. That's the bond market. So all of that put together, along with now 30% tariffs being imposed on the EU and Mexico, it doesn't paint a very rosy picture for the overall economy in America or the world. One ray of light that some people are showing me is that the economy isn't projected to contract this coming quarter. And that's not because of any robust growth, it's because of the mathematics behind our GDP. Our economy contracted this year because importers bought a lot of extra goods getting ready to buckle up for higher tariff prices. And you see how in this formula, X is exports and it's subtracted from M, which is imports. Well, M was significantly larger than it was, which is why we saw such negative action. The reason why we may see some economic growth in these 3 months is because not of the significant growth of any of these other numbers. It's just going to be because of the drop in imports. Does this mean we are 100% headed into a recession? No, anything can happen, but it definitely doesn't look very positive for the future with the information that we have now. I am the Geo Husar, and it's great to be back. Thanks for watching.